On today's episode, a new Fed chair could be fantastic, Real buys RE/MAX, and we talk about the type of homes people are buying right now. All that plus some market statistics. My name is Mark. Welcome to the Gentleman Broker Mortgage Brief. In this market, there are two kinds of homes that are standing out: affordable, functional starter homes and lifestyle multi-use homes. With the smaller and more affordable homes, the starter home, buyers are prioritizing monthly payment over dream features. They want functional layouts over square footage. These are going to be your townhomes, condos, smaller single family and entry-level new builds. These buyers are choosing based on their budget, and they are making compromises on size, but they want access to services, shopping, and proximity to work. They want practical layouts, and they want a functional move-in ready experience. The key here is they are willing to buy a smaller home, but they want the reliability of a rental. The second is farm, land, sustainability, and multi-gen compound style homes. These type of buyers are likely move-up buyers selling their master planned community home to get away from the city. These rural homes are seeing good cuts in prices, typically due to the distance from nearest shopping and services and the amount of effort required to upkeep and maintain those properties. But these homes give families the space to build, they give them privacy, and a reset of the hustle and bustle. Bottom line, people are burned out from being around other people and are willing to live more remote. Let's jump into some quick stats. The 30-year fixed mortgage rate is around 6.3%. Purchase applications are up 2% week over week. Mortgage delinquency rates are at 3.35% as of March of this year. And foreclosure filings are up 26% year over year. Average homeowner equity, $299,000. Average credit score for conventional loans, 736. FHA average credit score, 667. Average down payment, 14%. Average first-time buyer down payment, 7%. Average debt to income, 36%. Average loan size, $385,000. We got some news in the real estate world this week as well. One of the biggest names in real estate, RE/MAX, just got bought. And this isn't just a headline, it's a signal. RE/MAX is being acquired by a tech-driven brokerage called The Real Brokerage. Combined, they'll have over 180,000 agents globally. This is part of a bigger trend we're seeing right now. Traditional brokerages are being merged with tech platforms because the model is changing. Less brick and mortar, more cloud-based, more AI, more efficiency. But here's what doesn't change. The deal still needs to get done. Technology can speed things up, but it can't replace experience when a deal gets complicated or when it comes to understanding the psychology and emotions that buyers and sellers face. And in a market like this, where deals are tighter, timelines matter, and margins are thinner, that experience matters more than ever. That's why who you partner with on the financing side still matters. If you have questions about home affordability, want to apply for a home loan, or simply want to see your numbers, you can reach out to me at thegentlemanbroker.com. Also in the news right now, Jerome Powell's term as the Fed chair ends May 15th of this year, though he plans to stay on the Federal Reserve Board until 2028. Kevin Warsh has been nominated and is expected to replace him pending final Senate confirmation. This transition is politically charged, and Warsh is widely expected to be more open to rate cuts than Powell has been. There has been pressure from the administration to lower interest rates. My prediction for Q3 and Q4 is this. If the new Fed leadership signals more aggressive rate cuts, we could see mortgage rates drift lower before the Fed actually cuts them. The market likes to price in those expectations early. But I don't expect a straight line drop. Inflation, treasury volatility, and global events can still push rates back up. So my realistic range for the second half of the year is mortgage rates hovering somewhere in the high 5s to low 6s. Not a crash in rates, but enough movement to bring more buyers back into the market. So that's it. This has been your mortgage brief for the week. With that, I will leave you with this quote by Mike Tyson. Everyone has a plan until they get punched in the mouth. For everyone watching, I hope today is the start of a productive week. I hope you're proud of the work you are doing. My name is Mark, and I am the Gentleman Broker.